Okay, so let's take a look at limited liability companies. What I'm looking at here is the Pennsylvania statute. Um, just like we saw with corporations, limited liability companies are creatures of statute, and therefore you need to find the authority for the creation of a limited liability company in some state statute that uh, gives someone the power, the authority to form that kind of entity. And for fun, since we looked at Delaware corporations, let's look at Pennsylvania limited liability companies. Every state in the United States has a limited liability company statute, and so you can have a Pennsylvania limited liability company, a Delaware limited liability company, a Nevada limited liability company, a California limited liability company, whatever. But we're going to focus on Pennsylvania for the moment. So let's see what we can find in the statute that's worth focusing on. All right, well here, so what purposes can you create a limited liability company for? And it basically says they can be created for any lawful purpose except for the purpose of insurance. So that's good. It's pretty broad, similar to the corporation. What else? Anyone can form one, and in fact, the person who actually organizes the entity need not be involved in it at all after the fact. So it's very common to use some kind of service or to have a paralegal at the law firm do the formation. Again, very similar to the way a corporation gets created. A corporation, as we saw, got created by filing a certificate of incorporation. In this case, an LLC gets formed by filing a certificate of organization. And we're going to look at that in a little more detail in a moment. But here is the list of things that that form requires. And once you file that form with the state and pay a fee, boom, you have a limited liability company. Okay, a little more detail about when it's deemed to be effective and so on. Okay. So as we'll see, the certificate of organization is even thinner, if you will, in terms of its content than a certificate of incorporation. It really provides very little other than the name and some mailing information, some contact information for the entity. All of the guts of the formation, all of the provisions that are going to govern both the way the limited liability company raises money and how it manages its economic interests, and also how its management will be conducted, what the voting rights of its members are, etc., are going to be specified in a document called the operating agreement. Now, you're going to see as a theme how sort of casual or not as formalistic LLCs are versus corporations. And here we see that the operating agreement of an LLC need not even be in writing, right, unless specifically required elsewhere. And so you can actually have an oral agreement for an operating agreement, but that's not good practice. You certainly want to have put down in writing some form of operating agreement, which is going to have the content similar to a combination in the corporate world of the charter or the certificate of incorporation and the bylaws smushed together in one document. And we'll look later at some examples of an operating agreement. Now, this clause, right, an operating agreement may contain any provision for the regulation of the internal affairs of a limited liability company adopted by the members, whether or not specifically authorized by or in contravention of this chapter, except where specifically prohibited, right? So what they're trying to tell you is that it's really up to you to write the rules, right? You are free to decide that voting will go this way, that the economic interests will be going this way, that losses will be allocated that way. It really is sky's the limit in terms of how you can set up the rules for this entity. So much more like partnership than perhaps like corporations, because corporations come with set building blocks. You have stock, you have common stock, you have a general rule of one share, one vote, so on. That is Not the case in an LLC. You can literally write whatever you like for the most part. And so that's a real invitation to creativity. What else is interesting? Oh, so here, obviously, a big part of why LLCs are powerful is that they have the same benefit as a corporation, right? So the members of a limited liability company shall not be liable, right, for the debts, obligations, or liabilities of the company, right? So, or for the acts of any member, manager, agent, or employee of the company. So that's the concept of limited liability. LLCs bestow upon their owners limited liability, just like corporations bestow upon its shareholders limited liability. Okay. That's one of its attributes. That's why it's attractive. Here's another thing that's sort of in between a corporation and a partnership: limited transferability. So it says that the interest of a member in a limited liability company constitutes the personal estate of the member and may be transferred, right, as provided in writing by the operating agreement. Now, okay, we're going to see these words, as provided in writing in the operating agreement, a lot. So if you write it down, then those are the rules that will apply. But if it's not written down, right, here it says, if all the other members of the company approve the proposed transfer or assignment by unanimous vote. So you can set a different approval requirement, or you can say there's no need for approval at all if you want, but you have to do that in writing in the operating agreement, but otherwise it's a unanimous vote requirement. That's much like partnership, not like corporations where the default rule is free transferability. But here, notice something, right? What can't be transferred is effectively your voting rights, right? Whereas, however, see, it says the transferee of an interest of the member shall have no right to participate in the management of the company or become a member if there has not been a unanimous approval. But the transferee shall be entitled to receive distributions and the return of contributions. So you can transfer your economic rights to somebody without your fellow members' approval, but you can't transfer your voting rights. And so that's sort of halfway in between what is the case with partners, which can't transfer anything without their fellow partner approval, and corporations where you can transfer everything freely. Again, in all cases, subject to a different rule being specified in writing amongst the parties. Okay. What else? Anything else worth pointing out that's special? Again, here, right? Limited liability, from time to time, make distributions and allocate profits, blah, 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 upon the basis stipulating in the operating agreement, or if not stipulated, per capita, right? So meaning one person, one share. So if you're silent, it's one person, one share. So if that's not the deal, you definitely want to write it down in the operating agreement, which again is what most people do. Okay, so one last part of the statute that's worth spending a little time on is the one that deals with voting rights and management. You'll remember in the corporation, we have this thing called the board of directors that is charged with management of the entity. In a limited liability company, you have a choice. You can either have the entity be managed by a manager, right, which is some body, so either an individual or a group of individuals, and it can be sometimes, it's actually quite common to create what we call a board of directors, but you'll notice nowhere in the statute is the concept of a board stated. But again, freedom of contract, so you can write into your operating agreement that you have a board of directors, and the board of directors shall be deemed to be the manager for purposes of the statute, right? And then that manager, in turn, can delegate its authority to officers or agents to run the business. But and so you can recreate the form that looks just like a corporation in a limited liability company. But you also have the option, and this is very common, especially in smaller limited liability companies or in so-called single member limited liability companies is to have the members manage the LLC. And what does that mean? Well, instead of having this separation between the owners and the managers, you can simply have them be the same people. It's much like a partnership, right? So instead of having this separate category of people whose job it is to run things, you can have the owners run things. And by doing so, you don't give up, like we saw you do in the limited partner context, any of the limited liability benefits. You can provide that you have an LLC that's member managed as opposed to manager managed, and therefore have it be run by the actual owners, but those owners then, by doing so, do not become exposed to general liability as they do in the partnership context. So that's cool. It's sort of a cake and eat it too feature of LLCs. Now, in voting, there is some requirements that even if you have a manager who you've delegated authority to, there are some matters that must always get a vote of the members. And in particular, amending the certificate of organization is, or the operating agreement is one of those matters. But again, with limited exception, you can specify differently in your operating agreement. And most of the voting rules are going to be, all of the voting rules, if it's well written, are going to be as set out in the operating agreement. So, all right, so that's a look at the statute. Why don't we form a limited liability company? And the way you can do that, besides the online services like LegalZoom, is it's actually pretty simple just to do yourself. I went to the Pennsylvania Department of State's website where they have a list of forms. I am forming a domestic limited liability company, and there I have a form for a certificate of organization, and it literally is set up so that I can just, it's a PDF that I can just go through the boxes, print it out, and file it along with $125 and what they call a docket sheet, which is basically just a piece of paper where you put your name and address, and you send it in, and boom, you have a limited liability company. I've saved the PDF somewhere else, so here, how simple it is, right? What do I need to put into this document? Well, here, I'm going to form a company. I'm going to call my company the Transactional Law, Institute. Now, I can't leave it like that. You must have, as it says here, and as it said in the statute, if you look, you have to have something like the words company or limited liability or an abbreviation. So I'm going to put LLC. All right, I'm going to fill in this information about the registered office. You can use one of those like we did in our corporation, one of those registered agents like CT Corporation. But because my company is going to be based out of my house, I'll put my home address here because I actually have a physical address in Pennsylvania that I can use, and so I don't have to pay somebody to pretend to be my registered agent. I'll do that. Okay, I am the organizer, so I'll put that in there, the information. I'm not going to have certificates, so when I print this out, I will cross this out with my pen. I am not going to let it be a manager-managed LLC. I'm going to let it be a member-managed LLC because actually this LLC I'm forming is only going to have one member, and so why make things complicated? So that member, who's me, is going to be also the manager, right? And then I can actually hire someone if I want to be an officer, or I can name myself as an officer of the limited liability company and do things on behalf of the limited liability company. The specified effective date, actually, I don't have to specify anything. I'm going to just let them tell me when they file it, and boom, that'll be the effective date. This is irrelevant to me. It's not a restricted professional company, so I will cross that out again when I print it out. So that's all I needed, right, was to fill in some address information, to give it a name, to put in my address or the registered agent address, to identify myself as the organizer, or that could have been the paralegal in the law firm. I'm going to strike this out because I don't want to have certificates. I'm going to strike this out because I don't want to have a manager. I want to be a member-managed LLC. I'm not going to fill this in because it's going to be the day they tell me. And then I'm going to strike this out. And then I'm going to sign it and send it in with $125 to these guys. And in a few days, they will send me an email with my stamped form that shows the date on which my LLC was created. And that's it. So as we discussed when we were talking or looking at the statute, even though we, by simply filing the certificate of organization with the state, have a now valid and existing limited liability company, we aren't done. We should go the next step and find our or create our operating agreement, because otherwise, absent a written agreement, we're going to either be dealing with the possibility that someone's going to argue we had an oral agreement, or we're going to otherwise have imposed upon us some of the default rules that were specified in the statute. So because it's best practice to have an operating agreement, we're going to write one. And so one way we can do that, and there are lots of sources for operating agreements in the world, especially simple ones for like a single member LLC that we're creating. But I'm going to go to Practical Law, Westlaw's Practical Law. I'm going to search for operating agreements, right? And here I'm going to see a form, operating agreement, single member, that's me, meaning this is going to be a very simple form as opposed to the multi-member manager-managed form that they also have. And I'm going to click on that, and there is my form along with their drafting comments, right? But what I've done is I downloaded that form in Word and I filled it in. So here, this is my operating agreement, my draft, right? So let's see what I did. I put my name in. Remember, I'm calling my LLC the Transactional Law Institute LLC. And I added this because it was required by the statute to put something that refers to the fact that it's a limited liability company in its name. All right. So this operating agreement of my entity, effective as of, well, I don't know yet because I'm going to wait until I get told what the date is that it was formed, and then I'll make that date the same or a day after, is being entered into, and this is actually a form of contract between the company itself, meaning the new entity, and its sole member. And in this case, the sole member of this entity, I'm making another LLC that I control. So it's called SpireCube. Cool name, right? Which happens to be a Delaware limited liability company, right? So now I have a single member LLC that in turn is owned by another LLC as its sole member. Okay. I'll fill in the date once I know what it is. And then here we go through the operative terms. The name of the company is, here, purpose, right, is to engage in any lawful act for which they can be formed. And as we saw when we looked at the statute, you can have any purpose, lawful purpose, other than insurance, right? So, and just like we saw in the corporation when we formed our certificate of incorporation, why you can, if you wish, choose to limit the purpose for which your entity can be used, but why? Why do that? You're just going to run into trouble later if you try to define exactly what it is your entity can do. So let's go and take up all the room that the statute provides. The company shall have all powers necessary. Okay, again, very much. Again, why not use what the statute lets you? Registered office, just simply reminding us that we have to have one in the Commonwealth, and in my case, I chose to use my home address. Specifying who the initial members are and that that member owns all of the membership interests. This is a sole single member LLC, so SpireCube owns it all, its address. Talking about how additional members could be added later by amendment, but it requires me as or SpireCube as the existing member to approve that, but we're contemplating the possibility that down the road we'd add more members. Okay, so here's where we make clear that this is a member-managed LLC. So here I, as the member, have the exclusive and complete authority and discretion to manage the operations and affairs of the company. Right? It's almost lifting from the corporate statute, except here we would say the board of directors. Well, I'm not bothering with a board. Why bother with a board? This is a sole single member owned entity. The only person involved is the sole member, in this case SpireCube. So I'm going to have SpireCube be the entity that sits in the place of the board, right, and has all the powers that a board would have in the corporate context. They have now here in this LLC. Okay, and one of the things that boards do, both in corporations and in LLCs, now what a member manager does, or what a manager does in LLC, is they elect officers and delegate authority, right? So just like a board did not walk around signing contracts or running the business day to day, it picked other people to do that. I'm making clear that the member here has the power to designate one or more officers and give them whatever title we want, so they can go around acting for the entity. And so I'll probably create a title. I think I like Grand Wizard or I don't know, Executive Vice President, whatever. I'm going to call myself something, and then me as an individual, SpireCube is going to then hire me as an individual to go around and do things on behalf of the Transactional Law Institute, LLC. Maybe I'll become the executive director. How about that? All right. But again, that's what the operating agreement tells me I can do, and that all I need to look for is some action by SpireCube as the member in creating the title executive director and then appointing me, Carl, as that person, right, into that role. Here we make clear that this is a limited liability entity, no liability for simply by reason of being a member. We also provide that the entity will indemnify the member if anyone should go after the member on some claim. We make clear that the entity is perpetual, absent some action to dissolve it, just like a corporation. We talk about capital contributions, but again, since it's just one of us, we'll decide later and decide what we want to do. This we will talk about a lot more in a second, but one thing I make clear here is that we want to disregard this entity for tax purposes. Okay. Now, what does that mean? That means that we want the items of income and items of expense that occur at the Transactional Law Institute LLC level to be deemed to be items of income and expense at the next level up, meaning that there will not be a separate tax liability paid by the LLC, but that those items of income and expense will be added to the income and expense of the member when they file their return. And to make it more interesting, since that entity itself is an LLC that's elected to be treated as a partnership, it itself also won't recognize the tax. It will go up even higher to the next level, but we'll talk about that more in a second. We specify when distributions can be made, and again, since the member is, there's only one member and the member is the only one who cares, the member will decide. We specify when dissolution can occur, and it's basically when the member decides. No surprise. We make it clear that amendments to this agreement require the member's consent, and then we sign. Okay. Now notice signature blocks, right? This is the signature block of the member. SpireCube is the member. How does an entity like SpireCube sign something? It signs it by having the individual sign on its behalf in its capacity as whatever agent it is. And in SpireCube's case, the agent is called the manager. But then when the company signs, it signs in its name, right? But through its member, because that's the only entity that has the power to bind it, right? We saw that earlier in the operating agreement. But since its member is itself an entity, again, we have to repeat the agent relationship in the signature line, okay? So again, we're in our signature block respecting the hierarchy of roles that we've stipulated in our constitutive documents, like in this case, the operating agreement. All right, that's a quick tour of a very simple single member managed LLC's operating agreement. So having looked at the simple form of a limited liability company, it's probably a good idea to take a moment and step back and look at the three types of entities we've been discussing so far. We've looked at partnerships, and in particular, the form of partnership that is most commonly used, the limited partnership for business enterprises. We've looked at corporations, also sometimes called C Corps, as opposed to S Corps, and I'll mention what an S Corp is in a moment. And then finally, most recently, we looked at limited liability companies, right? And here's a chart that I adapted from a chart that Practical Law has called Choosing an Entity Comparison Chart, right? And the point of this chart is to sort of summarize the key differences, the key traits that each of these three types of entities have and their differences, so that someone who's coming to you and says, hey, I want to start a business, you can show them why one form of entity may or may not be better than another for whatever purpose the client has. So let's go through it for a second. Here we have, well, so who are the owners of each of these entities? A partnership, we know, is formed by two or more persons who've come together to pursue something, a business for profit. So we have these people called partners who are the owners. In corporations, you have one or more stockholders or shareholders, depending on what the state statute calls the evidence of ownership, stock or shares. And then in LLCs, you can have one or more members who are similar to stockholders or shareholders. These are the folks that own the equity interests in the enterprise. So those are just the different names for the ultimate owners of those kinds of entities. And then, so how can those ownership interests differ? How does it get structured? Well, in a limited partnership, so as opposed to a general partnership, in a general partnership, everyone's the same, right? Even Steven, they all have equal rights to participate in management, equal rights to participate in the economics, unless the partnership agreement says something different. In a limited partnership, however, we have two categories of partner, a general partner and a limited partner, and typically the limited partner is passive, while the general partner is responsible for the management of the entity. All right, so we have these two categories, and we learned we have to be careful if we have limited partners that they not participate in the active management of the enterprise, because by doing so they would be giving up their limited liability position as a limited partner. In a corporation, we are given more sort of fixed building blocks, if you will. We are supposed to use a thing called common stock and then a thing called preferred stock that have sort of set features to them as the way of creating economic interests. Whereas in a partnership, we can simply write exactly what it is in the agreement, in the partnership agreement, that each person's entitled to. We can say, oh, this person's entitled to 40%, this person's entitled to 60%. In a corporation, to get to the same result, we have to play with the blocks we are given. So if we want to give 40% to someone and 60% to another person, we have to make sure that we have 40% of the common stock being distributed to that person and 60% being distributed to the other person. We have to play with the pieces we've been given. We can't just write exactly what we want. But, and similarly to a partnership, a limited liability company, we can simply write the operating agreement, as we saw, any way we want. And we're going to see examples later of how far we can go to be very partnership-like in simply defining different rights being granted to different people however we wish. But none of that is really that significant, because while, yes, there are different ways to approach it, and there are different drafting requirements and different tools you have to use in writing the different kinds of agreements that you use, in the end, you can get to the same result. Right? So if you want to give X percentage to somebody in a partnership, you can do it one way. If you want to do it in a corporation, you can do it a different way using stock, and same with the limited liability company. So actually, while there are different ways that you have to use, at the end you can get to the same result. So it's not a significant difference. Of course, the documents that are specified in order to create these different forms of entity are different, but again, not terribly so. There's not that much of a difference between a certificate of formation for a partnership and a certificate of organization for an LLC, or even for that matter, a charter for a corporation. But they do have their own individual idiosyncrasies that you are aware of. But here's where we're starting to get to the nub of it, right? So why would you pick one of these entities over the other? And probably the biggest factors are tax, liability, and management, right? Tax, okay. So a partnership is not a separate entity for tax purposes. It's a pass-through entity. And what does that mean? Well, we've mentioned it already, and we're going to look at it much more closely a little later. But what it basically means is that the business itself, the entity itself, does not pay tax. That what happens is the income and expense that's incurred at that level then gets recognized by the owners, and then those owners pay tax as if it were their own individual income or expense rather than the entity. So there's what we say sometimes is that there's only a single level of tax in a partnership structure, unlike the corporation. In a corporation, there's two levels of tax. So whatever the business earns, there's tax paid by the business itself at the corporate rate. And then to the extent that there are distributions by the corporation of its earnings through dividends or otherwise, that then triggers a second level of tax that's paid by the stockholder. Okay? And so generally speaking, it is, from a tax point of view, beneficial to be treated as a partnership or a pass-through entity or a disregarded entity, another phrase we sometimes see. And so there is an incentive to be a partnership versus a corporation from a tax perspective. That incentive is not as strong as it may sound. There are reasons, and we can explore them later, that a corporation may be just as good. For example, if a corporation is expected to lose money for a significant amount of time, it may actually be better to use the corporate form than to use the partnership form, may be more valuable. But again, generally speaking, people prefer to not have two levels of tax. And an LLC is great because an LLC is a form of entity that allows you to do what we call checking the box. The IRS says an LLC can be treated either as a partnership or disregarded entity or as a C Corp. And it's up to you. You just check the box. And when you check the box, you decide whether or not you want to be treated like a corporation or whether you want to be treated like a partnership. So it's sort of a best of both worlds kind of option. Liability. We saw that liability is an issue in partnerships. Particularly, general partnerships are definitely not very protective. Limited liability can be achieved in limited partnerships, but that's at some cost because limited partners can't participate in management. Otherwise, they give up that liability. However, in a corporation, stockholder liability is clearly limited. All right. So even if that stockholder then is also an officer or a member of the board of a corporation, that by being such, they do not expose themselves to general joint several liability. They still benefit from limited liability. Similarly, the same kind of limited liability is available to LLCs. So on the liability side, corps and LLCs are preferred. On the tax side, partnerships and LLCs are generally preferred. So then the question of management. Well, we know how partnerships work. Basically, the GP is the manager who can then delegate to an agent. In a C Corp, we have this thing called a board, which in turn designates officers. Right? And then in a limited liability company, we can do it any way we want. We can have individual owners, the members, run the enterprise. We can have a board-like structure or a manager structure who's separate from the members. And all of those people can in turn employ agents. Right? And so in terms of the flexibility of how you structure your management, an LLC is by far the most flexible. And it is flexible, but at the same time does not give away the benefits of limited liability like you may do if you get too creative with a limited partnership. So from a management structuring point of view, LLCs are definitely the preferred vehicle. So I would say the bottom line on all this is to say, you gotta come up with a reason why you wouldn't be an LLC, right? So in almost every case, your first assumption should be, the best choice is going to be an LLC, and that's because it has the best tax treatment. Or you can, if it for some reason you want to be taxed like a corporation, you have that option by checking the box. Right? You get the best form of limited liability. It comes with the least restrictions on how flexible you can be in designing your management structure. And in fact, the other thing it comes with is you have the least formality, right? So remember the piercing the veil cases, some of the criteria for piercing the veil included not observing corporate formalities. Well, in the limited liability company, you don't have to observe particularly any set of formalities, and if you don't threaten your status as a limited liability entity. So for all those reasons, you ought to assume that absent some compelling reason to the contrary, limited liability companies is the way to go, right? Now, what could those compelling reasons be? Well, here's probably the biggest one, and that is LLCs are generally speaking not publicly traded, and limited partnerships are generally speaking not publicly traded. And the most common form of entity for a public company, meaning one whose shares or equity interests are traded on a public stock exchange, is a C corporation. Right? In fact, there's some perceived wisdom that, and this is apparently more true on the West Coast than it is on the East Coast, that if you believe that your outcome for your startup company is that it's going to be a publicly traded company, you might as well start out as a C Corp because that's what you're going to have to be when it comes time to register with the SEC. And so on the West Coast, at least, there's a general perception that venture capitalists insist that even the smallest company, if they're going to work with a venture capitalist, has to be a C Corp. Because why not start out with what it is you expect to be down the road? It's sort of a sign of taking seriously your ambition to be a public company. I think that's a little overstated, and certainly in the East Coast, there is a tendency to let you start as an LLC when it's attractive to have pass-through taxation, and understanding that you're going to convert when the time comes to go public. But since most companies never make it that far, why insist that you start that way? But okay, so if you are planning to or imminently about to be a publicly traded company, you have to be a C Corp, okay, for most companies. There's some rare exceptions. So you might as well start as an LLC, right? might as well start as an LLC. Okay, well, when would you ever want to be an LP? And the answer to that is less about capital raising and more about tradition. There are certain industries in which the limited partnership form is historically been the most common one. And interestingly, the industry that comes to mind is the investment management industry. So hedge funds and private equity funds tend to be limited partnerships, as do real estate and oil and gas and those kinds of partnerships or investment partnership structures. Even the word investment partnership includes the word partnership, right? So, and the reason why they haven't switched to LLCs is not because LLCs wouldn't work; they would. And more and more, you're seeing some of these things set up as LLCs, but it hasn't switched wholesale because investors in these investment vehicles are so used to dealing with limited partnerships and have invested so much energy in understanding and becoming comfortable with the standard documentation that creates a limited partnership in those industries. They just don't want to change. They don't want to reinvent the wheel. They don't want to learn new stuff, right? So even though an LLC would probably be better and certainly would have been the choice had we been starting from scratch, history is binding us to this tradition of using LPs. But, so absent going public or absent being in an industry where there's a strong history, LLC is probably the way to go. Now, some people say that the reason why LLCs, they're hesitating to switch to LLCs has been that there's a lack of history around LLCs, that the law is not well developed, that these are relatively new statutory creatures. In fact, 10 years ago, no one ever used them very often, and now that's not so true. But there's not this same depth of legal interpretation out there. There's not that many court cases. There's less of a certainty around how the law will get interpreted, and so corporations may be better than LLCs because they're better vetted by the legal process. But that is absolutely changing. People are becoming much, much more comfortable as time goes by with the LLC form, and I would say they've certainly eclipsed the limited partnership, and will soon be eclipsing, particularly for small privately held businesses, the C Corp form. Now, I did promise to mention what is an S Corp, right? So sometimes you'll see in the list of different entities, and you would have if you went to the practical law choice of entity table, you'd see another column for a thing called an S Corp. An S Corp is a corporation, so you form an S Corp just like you form a C Corp by going to the state statute process and forming a corporation. But an S Corp is different than a C Corp because of how it's taxed. The IRS recognizes two different types of corporations, or these two different types, C and S Corp. And an S Corp is treated just like a partnership. So it's a corporation for corporate law purposes, state law purposes, but it's a partnership for IRS federal tax purposes. And so in a way, it's sort of like a limited liability company in that you get the benefits of being a corp, state law benefits like limited liability, but you get the benefits of pass-through taxation like a partnership, which is just like what we said was so great about LLCs. Right. Now, why would S Corps were very popular before the rise of the LLC, right? Especially for small family-owned businesses. You'd find a lot of people, especially accountants, telling you, oh, you got to be an S Corp. Now that LLCs are out there, well, they are probably a better choice. And most importantly, because you get the exact same benefits you were looking for from an S Corp in an LLC, but without all of the restrictions. So S Corps have very significant restrictions. They can only have 100 shareholders or less, and all of those shareholders have to be individuals. They have to be people. And so That, for example, would eliminate your ability to take in money from some kind of fund, right? Some kind of investment firm. And so why limit yourself that way when you can get everything you want by being an LLC? So I didn't bother to include S corps in this chart, but I just wanted you to be aware that that's a concept that sometimes you'll run into. All right, well, that's the choice of entity. Now that we know that, we're going to spend a little bit more time getting deeper into how LLCs work because, as I said, absent some reason that you can come up with that's particular to your situation, probably every time you form a business entity from here now going forward, it's going to be an LLC.